what's your favorite pickup line?
What?
Okay.
Right, hello and welcome to Camel Finance. I'm your boy Camel, and I got a couple of interesting things today. Okay, first of all, I want to talk about a new pendulum I seem to have discovered since being a YouTuber. So I'm going to quickly talk about that. Quite a few people have been saying to me, oh, you need to check out Crypto Crew University's idea that everyone's wrong about 100k Bitcoin. So I had a look at this, and at first I was like, wow, that's pretty amazing, right? But then, remember, camels have much better eyesight than horses or donkeys. Okay, then I started to really think about this, and I'm going to show you something that's not quite right with this. Okay, so again, we'll go through that, and then we got a few things about ETFs and some charts as always. So first of all, if you've been here before, you've probably seen me draw on that inflation to deflation pendulum, right? But I seem to have discovered a new one since having a YouTube channel, and this is the toxicity pendulum, right? There seems to be this weird thing at play where when we got an uptrending market, nice uptrending, right? I would say the pendulum is on this side, and we'll call this pleasant, right? We'll call this P for pleasant. And what happens is, as the markets move up, of course, they then consolidate or they pull back, and then they move up again in another leg. And what I keep noticing happens is, whilst we're trending, the pendulum is on this side, pleasant. Everyone's happy, it's good vibes only. And then, as the market starts to consolidate sideways or indeed pull back a bit before that next leg higher, this pendulum swings towards toxicity. And I get all these people coming out and throwing shade. And it's kind of wild, okay, because it just shows, one, if you can't make a point without having to name call or be on this side of the toxicity pendulum, right, then it just shows how much of a rookie you are. Because people were mocking me yesterday for saying that we were oversold and due a bounce or whatever. And look at the S&P, right? It's done absolutely nothing. And the NASDAQ, as of yesterday, made a closing high, okay? An all-time closing high for the NASDAQ. And yet people, for some reason, are out here talking about how the markets were crashing, right? And I don't understand it. I'm sure people are just using way too much leverage and getting wrecked. But Bitcoin, again, what has Bitcoin really done? It's completely sideways, okay? It's still in this range. I don't understand, like, are we looking at different things? So can everyone please just chill out? I know 99% of you are lovely, and 99% of you, when you have a point to make, can make your point without having to throw shade. But it's, we operate a zero tolerance policy here. You're just going to end up getting blocked, and then you're really just shooting yourself in the foot, okay? So can everyone just relax? And pretty soon, remember, as the market starts to trend again, whether that means we go sideways into a consolidation cycle and up, or indeed we pull back into a deeper cycle low, which I'm going to show you. Bob Lucas has an alternate count. We may have had this weekly count mislabeled, so we're going to get into that. But regardless of the path we take, sideways and up, or down and then up, the market will start to trend again. The pendulum will swing back in this direction. And then suddenly, once the markets are in up only, everyone goes back to being pleasant again. So just try to keep in mind, if you're new here, or if you're inexperienced, or if you're losing money, or whatever it is, right? Just try to keep in mind, I don't actually ever do anything different. The pendulum may well oscillate from side to side, but I never do anything different, right? I draw a trend line and I buy the break, and then I draw a trend line and I sell the breakdown. That's all I do. And it doesn't matter where we are in this pendulum, left, right, or in the middle, I'm going to continue to do the same thing, okay? So if you've got a point to make a point, but don't just throw shade in the comments. And also, if you're looking at a chart like Bitcoin right now, and it's sideways, as it is, right? If it's sideways and your interpretation is anything other than sideways, okay, then go and study how to read a chart, because how do you draw any other conclusion apart from sideways from here? We're clearly in a range, okay? That's it. You can call that a deviation. But we're in a range, and we're probably going to continue to be in a range, okay? Also, the markets are not crashing, okay? Don't be coming at me and saying the markets are crashing when we're printing new all-time highs. Let's have a look at the Dow. Okay, does that look like a crashing stock market to you? It doesn't to me. Like, we still haven't even stopped me out from moving my stop up. So, all right, anyway, enough of that. So there's this idea from Crypto Crew University that everyone's wrong about 100k in 2024. And so when I saw this title, I was like, go on then, let's see. And I watched this video, and I actually encourage you to go and watch it. In this video, the point he makes is that if you take the percentage gain of the first cycle, which is here, right? You take this number and you divide it by 5.3, the answer that it gives you is the exact percentage gain of the next cycle. So then he moves up here and says, look, this is exactly how much we moved from bottom, bear market low, to bull market top. And then you take this percentage gain and divide it by 5.3. And surprise, surprise, what you get is the percentage gain of the next cycle, right? And so he continues to do this, where he takes this cycle, this 11,400% number, divides it by 5.3, and it gives us this 2,200% number. And so the conclusion that he draws is there's something weird going on here. There is something strange at play where dividing everything by 5.3 gives you the exact percentage gain of the next cycle. And thus he suggests that we could do this one more time, take this 2,200 number from the last bull market, divide that by 5.3, and it gives us this number of around 400%. And so the idea is that since we know we're going to go up by around 400% from the bear market low from November of 2022, after the FTX crash, that if we apply this same number, it gives us a roughly 400% gain, which he then suggests would only give us a top of around $79,000 for Bitcoin. He also then goes on to speculate that this would be classified as a triple top, and thus we are not going to 100k or any of these bigger numbers, and diminishing returns is indeed at play here. So when I first watched this, my initial reaction was, wow, what are the chances that you divide every one of those percentage gains by 5.3 and you get the exact percentage gain of the next cycle? I thought that's some kind of magic, right? What kind of sorcery is this? But like I said, camels have better eyesight than many other animals. And so the first thing I noticed, let me back this up to here real quick. The first thing I noticed was he has chosen a pretty much arbitrary level in which to start this bull market calculation. I don't know why we started it here, but if I hop into this chart, this is where he started it from. Now, I couldn't get it exact to the tick to get the number the exact same, but he started it in this neighborhood where I really don't know why we wouldn't at least start it from the range break, right? This line here, or even this low. I don't know why we didn't start it from here, or perhaps we should have started it from here, right? Out of all of those potential places to start this calculation off, the only one I wouldn't have chosen was this one in the middle, this arbitrary one in the middle. Why have we started it from here? I don't really know. And you probably won't be able to see this on your screen. Maybe you can zoom in if you're on an iPhone. If not, I encourage you to pull this video up yourself and go and look at this, right? Have a good look, study this. He has drawn this line, and I'm not joking, the bottom of this green box where he started this calculation has come from the middle of nowhere. There is absolutely no rhyme or reason that I can see to start this calculation from here. Of course, if you don't just start it from some arbitrary place, then the number changes and it throws all of these out of whack. But this is also true of all of the other ones, right? If you have a good close look here, he seems to have started this one at the bottom of this wick, which is fine, but the top of that box does not encompass the wick. I did my absolute best to zoom in as hard as I possibly could and get right at the top of the level, and you get a completely different number. Now, when you get a different number, the 5.3 magic suddenly stops working, and suddenly none of these cycles are divisible by 5.3 anymore. To ensure you've got the same chart as he has, then you would want to type in index like this, and then BTC USD. And he is using the Bitcoin all-time high history index. So we're using the same chart, which means I've started at the same levels, assuming that this calculation is for real, and I've got completely different numbers. So I encourage you to go and try this for yourself if you're one of these people that thinks he's, not talking nonsense. I think he's being deliberately misleading, and I was careful about choosing whether or not to say that. But I don't know how else do you justify starting this from back here? It doesn't even make sense. Like I said, he hasn't encompassed the wicks. He's chosen to use the bodies there for some reason. Then in this next cycle, again, I can see it on my screen. I don't know if you can see it, but he hasn't used the wicks here. He hasn't used the wicks. He's started above the wicks. So he has not exactly selected the low here. And he also hasn't selected the high. This green box finishes shy of the absolute top and starts above the absolute bottom. So again, is this deliberate or is this a complete accident? I don't really know. But I do know if you start it at the actual wick and finish it at the actual wick, then you get a completely different number. And again, that 5.3 multiple doesn't work. It's the same this time around as well. Again, if you actually grab the wick and go wick to wick, bottom to top, you get a different number than he does. So I would, encourage you to go and try this on your own if you don't believe me. Don't take my word for it. Go and figure this out for yourself. But the number two thing is, perhaps we could just say, well, Camel, aren't you being a little bit, pedantic here? Aren't you being a little bit too stringent on drawing the bottom to the top? And even if we say it's not perfectly divisible by 5.3, perhaps we're close enough, right? We're close enough to say, well, if we divide roughly what this was by 5.3 and project it out, that gives us somewhere in the neighborhood of, let's say, 68 to 80k. And thus, we could still perhaps use this as an idea to say that the top is not going to be north of 100k like most people are ready for. And to that I say, maybe, okay? Maybe. I personally do not believe in diminishing returns. I think we go well above 100k this cycle. I've been very consistent in saying that. And Crypto Crew University here does a really, really good job at, when you just watch this, it's really well edited and he makes his point and it all sounds magical, right? You watch it, even I did it. I watched it the first time and I went, wow, how on earth does that even work? That seems too good to be true. But of course, if it seems too good to be true, it usually is. And like I said, these aren't real measurements, okay? And if you sit there and try to recreate those measurements and try to get the exact percentage gains, it suggests to me that he actually spent a very, very, very long time messing around with these lines in order to make it fit his calculation. I don't believe he just drew these and then they perfectly divided by 5.3. So that's that. The other thing is, even if we assume this thing is correct, he then says, well, we're going to go on to make a triple top. But if you look up the structure of a triple top, it never looks like this, okay? That's not what a triple top looks like. And in fact, for a triple top to qualify, there is supposed to be a high degree of symmetry, okay? As you can see here, this is straight from Bulwowski's chart pattern book. So, triple tops, incredibly rare, number one. And number two, they typically have at least some degree of symmetry, right? Meaning the distance between this, excuse me, what's going on? All right, it's not going to let me draw over it. But the distance between top one and top two is typically around the same as the distance between top two and top three. It's also worth noting that you can't even, it's not going to let me draw over it, that's so annoying. It's also worth noting that you can't even technically trade a triple top breakdown until it clears that neckline down the bottom, similar to a head and shoulders, right? That right there would be the trigger to go short or to sell. So the idea that we're going to get a triple top here, just because it's 3 touches into resistance, doesn't seem very likely to me. I also think if you talk to most Bitcoiners or most people in the crypto space, the vast majority think that we are going to top somewhere in the 70 to 80 to 90k range. And I notice a pattern here is all of the people that say that think they are against the herd. They think the majority of people are expecting huge numbers. But it seems to me the crowded traders to expect diminishing returns to continue to play out. Now, on the one hand, as market cap increases, it becomes harder and harder to move the price significantly. Should we expect volatility to decrease as the market cap increases? Yes, over time. But does that mean that in the short term, when we've got ETFs potentially about to drive huge spot inflows, when we've got a circulating supply, an available supply, sub 2 million coins, when BlackRock and alike are draining the entire miner supply straight from the miner's OTC without ever letting any freshly mined Bitcoin onto the market, to me, it doesn't seem unfeasible that we could blow through this and end up somewhere up in the top of this range, right? Somewhere up in this neighborhood. That doesn't seem unreasonable to me. It kind of seems unreasonable that we would stop here. I don't really see the need to stop at 70 or 80k. But of course, as ever, I'm open to being proven wrong, and it'll be pretty easy to deal with, right? You just draw a trend line, draw another one, and then if it breaks down, you sell there, right? So nothing really changes. It's just I expect the top to be higher. But I encourage you to go and watch this video. It's pretty interesting, right? But again, it's too perfect, right? It's just too perfect that it fits absolutely perfectly. And like I said, you might not be able to see this or this, but when you pull it up on your own computer or your own phone or you zoom in, you will be able to see that he has chosen not to include the absolute tops and bottoms to make it fit the calculation. So yeah, no hate on this guy. I didn't even really know who this guy was before today. But like I said, you watch that video and you go, wow, that's incredible. And then you check it for yourself and suddenly not so much. So one day at a time, as always. So continuing on with this ETF idea, right? I showed yesterday that compared to all 500 ETFs that were launched last year, Bitcoin smoked all of them. But how do they stack up against all ETFs throughout history? And you can see that these 3 here are the Bitcoin ones. And they have taken the numbers 4, 5, and 10 spot for the first week inflows and are only around 25% less than the triple Q week 1 inflows. So this is no joke, right? I know the price is frustrating people. I know GBTC is selling a lot of Bitcoin and keeping the price down in the short term. But make no mistake about it. It's not like there's not interest in these ETFs. There is absolutely major interest in these ETFs. And if we can continue anywhere near this level of demand, then this is a beach ball underwater, right? You can only hold it there for so long. In more context, remember, ETFs has surpassed silver in the US to become the second largest ETF commodity. There is more money in the Bitcoin ETFs than there is in the silver ETFs. Really think about that. And at the current run rate, in 37 days, IBIT would have flipped GBTC in terms of Bitcoin holdings. BlackRock would have approximately 250,000 plus coins, surpassing Grayscale's projected holdings of just under 250,000 coins. BlackRock has picked up over 25,000 Bitcoin in just 4 days, and this leads to a daily acquisition rate of around 6,266 Bitcoin per day. Meanwhile, Grayscale is experiencing an outflow of approximately 1.6 billion over 4 trading days, which translates to roughly 37,000 Bitcoin leaving Grayscale in just 4 days. So GBTC is selling around 30% more Bitcoin than BlackRock is buying at the moment, and the price is still trading sideways. Do you not think that's bullish? Because I know a lot of people, like I said earlier, they're calling for crashes. They're saying things like, bulls are stupid here and everything else. But the facts are the facts, right? And the data is the data. The price is still trading sideways. And 2/3 of the Bitcoin moving around and being traded since the ETF launch is sell-side pressure. Once GBTC is cleared out the way, what do you honestly think is going to happen to the price of Bitcoin? And not to mention, we're only around 90 days away from the halving. So bullish as bullish can get, in my humble opinion. As always, though, I'm open to both outcomes. I'm open to being proven wrong. And as I keep saying, we lose that low and we have to entertain a pullback. Now, Bob Lucas has a different count to me. I currently have this right here marked as the weekly cycle low, and that gives us a much nicer, more healthy count between here and here. However, Bob, as you can see, has got a very early week 18 count, which suggests we're due for a pullback into the weekly cycle low, something like this. Now, if we were to do this, that would be absolutely normal, healthy, and to be expected. It would be nice to retest the top of this range right here, right? We did it here. You can see range break, retest, retest, go. And we are yet to retest this 32K range break. So that would be nice. That would be healthy. There's nothing wrong with this, right? If we get a pullback from here, that's probably what comes next. But again, I have yet to invalidate my count. Unless we take out that low, then my count's still right. This is not. And that means the weekly cycle low here is actually coming probably much more like here. And Bob agrees with that because look, he says, while 40K holds, there is still hope for one more surge. And there is, we could still do this 60-day consolidation up, then a pullback into that weekly cycle low. So don't count it out just yet. And remember, either way, it would be healthy to see a bit of chop into the late March low, assuming that Bob's count here is correct. And lastly, what the DXY is experiencing a counter trend rally at the moment, but it has still not flipped a buy signal on the longer time frames. So there is still hope to see this thing roll over, to see the DXY push over one last time, undercut that low. And of course, if we can do that, then you better believe crypto and risk and the stocks are going to go insane. So there's not much to say regarding the charts, is there? There's really not much to say. Look, the Dow Jones still kind of trading sideways, consolidation before the next move. Up or down is anyone's guess, but I would be continued to be biased to the long side here. As I said, NASDAQ, look, new closing high, as I said earlier. S&P 500 kind of looks like it's going to chop around and then go higher. So, the stop is the stop for a reason. That's where the trade is invalidated. All the while we're above the cycle low, the count is correct, and I expect us to move higher. That oil short, people were messaging me yesterday, like, is it time? Is this a real breakout? Well, it's looked like that multiple times and it hasn't done anything yet. So the stop is still choked up and that's it. I either get stopped out and the short gets covered here and we lock in the profit between here and here, or it does what I think it's going to do, which is kind of do something like this, roll over and continue a next leg down, and then we'll be looking to take the profit much lower down. So I don't know, right? That's the beauty of it. The stop is choked up and we'll let the market give me what the market's going to give. Gold looks like we have indeed had a 2 drives pattern, so this becomes the new cycle low back above the trend line. I expect it to grind and then break down, and if it can do that, then I think a short in this neighborhood is probably the way to play it. Bitcoin, as I said earlier, is sideways, isn't it? It's sideways. What else is there to say, right? Either we lose these lows, in which case we entertain Bob's count, or these lows hold, in which case, we're probably still going sideways for a bit. And the dollar, as I said, look, we have not yet cemented this as a 3-year cycle low. So get above this level here, around 104 and change, and we could well see this be confirmed. But if we roll over in the not too distant future, then we could well see a push to the downside and put the 3-year cycle low down here. That would fit my idea, that would fit the narrative a lot better in my opinion. But as ever, we'll take it one day at a time. I will say this, the crypto related equities, I know a lot of people are stressing about this, but again, we kind of know what to expect, right? If you've been here before, we kind of know what to expect. We're going to see this move down into that cycle low for Bitcoin, and then things are going to start to get pretty bullish. As I was saying yesterday, we could see some kind of bounce, build a bigger structure, and then, we counter trend bounce, move down into that cycle low for Bitcoin, swing, confirm with a breakout, add the long. Same for, say, Marathon and the like, we're probably going to get some kind of bounce, something like this, build a bigger structure, down into that cycle low, and then break out and confirm it, go again, right? So sticking to the plan here, that's all there is to say, right? There's really not a great deal going on. Oh, and I almost forgot the housing market short as measured by the Vanguard Real Estate ETF VNQ. Look, we took the short. and short and strong, right? So done a little bit of chopping. If I zoom in a bit so we can see what's going on, you can see we've had the breakdown, the retest. Now looking for that resumption. Got a little bit of a gap to backfill open today. But, you know, the tell is going to be, does this now sort of chop around and break out? In which case, you know, this is flat wrong. Or does this now start to do something more like this? And remember, there's that fractal from 2008, which kind of suggests that we've had that little spike and now we're due for the plunge. So as ever, fractals are just fractals, right? To be honest, what fractals really are is good for YouTube content. Okay, I'm just being honest. That's what they are. They're really good for when I make a video. I stick it here and I go, look at that, guys, and everyone goes, whoa, that does make good YouTube content. I understand. When I see people use that, it's nice to have a visual, right? It looks a lot better than when I do this, right? It looks way better than that. Something about the fractal is very pleasing to the eye, but they're not to be traded. And yeah, that is what it is, right? So let's see if we can actually get this fractal to play out. Of course, I'm not trading based on the fractal. I'm trading based on the trend line breakdown and rejection at resistance. And so far, so good. But yeah, this is the 2008 fractal from all the way back here, as you can see, right? So that's the 2008 GFC housing market implosion. Are we going to get the same thing play out today? I don't know. That's to be determined. But as ever, one day at a time, and we'll see what the market can give. Come back tomorrow and examine the closes and do the weekend deep dive as always. There'll be a members video out tomorrow as well, so look out for that. For everyone else, it's been a short week, but it felt like a long week to me. I don't know why. I hope you're all enjoying it. I hope you're all doing well in life. And until next time, take care from me. All the best. Cheers. Bye.